Hello guys, welcome to the Traiding Parrot. In just a few hours, we have the inflation rate reports coming in. And with Bitcoin hitting highs of 97.7, testing resistance at those levels, I want to discuss about a potential trap that could be unfolding in this area. I want us to be prepared for it in case the actual setup wasn't able to reach the full potential. I'll give you as well a quick update on the status of the bottoming signals coming from CryptoQuant. Where are we at the moment? Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. This video is gonna be a little bit in preparation for the expected additional volatility coming from the inflation report. We'll focus on alpha specifically for what's to come during the event and post the event. I would really appreciate if you can contribute with one like so we can get one day to over 1,000 likes in a single video about Bitcoin. That will be amazing. And a reminder that later today, I'm gonna be streaming with a special guest. Benjamin Cowen is gonna be joining me at 4 p.m. UK time. You can find the stream in the Coin Bureau Trading channel in YouTube. Do me a favor and hit notification on, hit the like, and write out a comment in the chat of the video. Share the stream with your friends. All of that really helps me. The louder we can get the video, one, we can get Benjamin to come back for another round, and we can also continue bringing in very interesting guests as well. All right, let's do the due diligence for a day like today. Let's see what's going on with retail. We are at 28%. We hit a low of 24, if I remember right. So that means that some retail has come back. Very mild indeed, still putting new lows. Absolutely a ghost town relative to where we were at this time in January in 2021. When it comes to the meeting, the expectations are that the core inflation rate month of month is expected to reduce to 0.2% from a prior of 0.3%. Interestingly, the forecast of the inflation rate year on year is expected to increase from 2.7 to 2.9. So if we look at general markets, you can see that the NASDAQ has come into the 21 weekly. S&P is at the moment hitting it as a resistance. Notice that once we already lost in August the 21 weekly, recovering the 21 weekly could be really positive. For example, in here, recovering it in this candle calls for a big rally. Recovering in here, you get another rally. So recovering in here could be another signal. And if we go on the daily time frame, I can see that on the RSI, we have a potential for the RSI daily after this higher low to call for a breakout. It is not guaranteed, but you can tell that the market is positioning itself for a potential positive outcome. Of course, if the 21 weekly this time rejected the price, we could be unfolding a completely different scenario as well. So we need to be paying attention both to what happens on the S&P relative to the 21 weekly EMA, in my opinion, and on a daily basis with the RSI could be giving good hints, particularly if we can break that resistance I showed you earlier. NASDAQ hasn't broken the 21 weekly as I mentioned earlier, but is at the moment battling against all the bearish divergences that were produced in here. And we have achieved more or less like a 50 to 60% of the full target of going to 19.6. Notice the past signal fulfill 100% of the target, but not always the targets are fulfilled. BIX is still trapped in that box. Gold after the breakout seems to be doing a successful retest of the breakout to the upside, which is not great for Bitcoin. Let's see what comes out of the inflation report. I feel like the 2.9 increase makes people think that there might be a reduced number of interest rate cuts during 2025, and there are even some people talking about an increase in interest rate, which could be really devastating and not necessarily priced in yet if that was the case, just hypothetically speaking, of course. I believe if inflation rate came out lower than the forecast, that should be something positive for the market. That's just my opinion. I don't have a PhD in macroeconomics, and it's just my humble perspective. Let me know in the comments what you think. At the moment, January is in the positive. getting close to 4% profits. On the weekly time frame, we can see that our support, the lowest closing price is at 93.6. We have the low of 89.121, and at the moment, our resistance on the weekly basis is 98.4. That level was resistance, support before. 3 weeks in a row has been resistance, so it is an area pending for the weekly time frame to overcome. It will be really bullish if we can close on a weekly basis somewhere in this area there, because that will mean that after this impulsive move, we get the move down, and instead of doing the dead cat bounce with continuation, indeed, we're just preparing to break from a flag. I think it's a tough one at the moment to put the all-time high. I agree, there are a lot of forces at the moment making it bearish, but as a trader, I always keep my mind open. And rule number one, I filter out all the noise, all the people calling things with emotions, which we have to say, after seeing all retail going away, that is precisely what market maker will want before a big move up. Think about it. Market maker makes the most money when people, or where the most people get disappointed. So always think, what could disappoint more people? And I think at the moment, everybody's happy and has already assumed that we are going to 70K or even lower than that. And actually, thanks to that, we managed to get to the target of 67.5, which we call out on Sunday evening, and people were swearing at me in the comments, telling me, you are completely crazy. Even someone told me, learn the charts. Amazing. And some people after tell me, don't worry about the comments, Mariano, you're doing a great job. And I think you're misinterpreting it. Every time I hear these people telling me that I'm really silly to think those outcomes, it just pleases me so much. So I agree. If we got to 100K or slightly higher in here, there is a huge risk of that becoming a lower high and trapping enough longs to get them squashed still in this pocket that we've been looking for over a week. I still have my order in there and I'm prepared for that. But we need to also acknowledge the bullish facts. We cannot be biased just to one single hypothesis that we want to marry. That's when you die. And let's compare 2020 to 2024. Actually, this side is 2025, and you can see that we have the bearish cross on the MACD, the fake out that was calling for upside, that's fake out number one. Fake out number two is with the dead cat bounce, the B projection. And today we are potentially confirming a bull cross on the MACD below the zero line. This is not the first one. This one was already below the zero line. It was a fake out. So we got fake out 1 and 2, and this is the third 1, 2, and 3 bearish crosses. So I'm not gonna ignore at the moment that we're getting a daily bullish cross in here. I'm just gonna stay calm and not think necessarily or marry the idea that this is calling for a new all-time high, at least not yet. I wanna see other things evolving as well. So I am open to get to 99 or even to 102 point something, and I'm prepared for that to fail and fill my order below the price. That is kind of the wrap up of that part of the video. We got this double bottom information. Yesterday we were calling this the retest, and today I'm changing my mind, because although this could be all the retest that you need, it might be the case that from there we still come back to 95.8 and we retest once again. The reason for that is because the last time we rallied from 91 to the same area in here, which is 97.7, corresponds with this, right? What we did is come back and retest 96K. So I think it's totally doable that this time we could do something similar. And at that point is where I want all your eyes, guys, in the charts. If we get to 95.9, you need to have an alert, because I believe that somewhere in this area there is the point of break of this current setup to 102.5. Price could pinch in here and then come back up and then continue like it did in here, or it could be the case that people are freaking out with the economical news and then put that low below the 89K mark. You can see that on the 4 hour after the breakout, the RSI has been rolling over. This rolling over is just slowing down in the progress, and that is natural as we approach such an important economic event. Does it mean that we necessarily are going to come out from that event with bad news? No, this just means that the investors are slowing down, waiting for those news to take the next step. You cannot conclude just from a rolling over RSI before the event. It's not sufficient. On the daily, there's some other battles going on. We're going to discuss about those. The most important battle going on at the moment is against 96.8, which is the point of control. Bitcoin is really keen to go to the second half of the range towards 102, since we actually managed to bounce from below the bottom of the range, which, similar to this one, calls for a journey back to the bottom. This one, in theory, calls for a journey to the top of the range. But why is Bitcoin still not doing that? Well, there is big news coming out today, and people are at the moment placing their bets in different directions. And yesterday in my short video, I mentioned that we need shorts to enter in here. And it seems that many people were watching that short video and they follow my instructions. You can tell how many people are placing shorts, placing their liquidity, their risk right there at prices that span up until 98.3. This is short-term liquidity. From last night, midnight more or less, they started placing shorts. Longs have done a great job as well. They have their risk of short-term spanning from 88.9 to 88.1 and resuming into the red at 85k. On the longer term, that is pretty evident. We have identified 3 hills in here, 1, 2, and 3, corresponding with this, this, and this. And you can tell that number 1 is the heaviest one. We just took a pinch of that red and we left everything on the table. So it is impossible for you as a trader to just keep all your eyes on this and think, yeah, sure, we are going to come back for a retest and it's just going to happen magically and I'm going to get to my target of 102.5. If you're just focused on this pattern and not looking at other sources of information, you might get away with a few trades in a year in the positive, and many of them are going to get or go against you. If price goes to the target of 102.5, you can see that long-term liquidity, there's almost nothing to take in here. So my take on that is either we go just to 102 to trap additional longs to squash them, or what the price really wants to do is another Trump rally. Let me explain. The Trump event is coming in just a few days, and there is a chance, if the news today are not that bad and allow the market to have some recovery, that we have some sort of potential sell the news rally into the Trump event. I'm just saying, no guarantees, no forecast, just saying let's be open for that, because in here there is no motivation to go there from the point of view market maker and liquidation levels, apart from this leftover of shorts there, which we could pinch in just a few minutes and then continue with the rollover and then still go to 89 or below. So if we go to 102, extremely high risk. We are not going there. There's no motivation to go there. So it could be the perfect bull trap to do this. But prepare yourself to do some trailing, because potentially our swing trade, our long, could get there and suddenly start pumping and taking all of this into the event of Trump. How many people are going to get disappointed if this happens? Whew! A lot. I check Twitter every day and I see pretty much a 90% of the people in full agreement that we're going lower. The actual discussion is how low we're gonna go. So I have to do the due diligence of a trader and think, what if it's the opposite? And if you're thinking, sure, but you told us that the weekly time frame has lost support and we are pretty much in a downtrend with the RSI in here. Yeah, but I also told you that in areas like this, when you lose the support on the weekly basis, a couple of candles going into the resistance are just enough to take the price to above 100k and initiate a potential short squeeze. And the takeaway of this is not whether the price will go to the upside or to the downside. The takeaway is to not discard certain events that are still possible and incorporating that information into the way you're going to approach your trade, because you need to think about it. Am I going to take profits today, tomorrow, at 100, at 103? What is there? What is my risk of still holding there? Do I need a stop loss? Do I need to DCA? Do I need to scale down? And I think it's your responsibility to master those elements. You can see that we pinch the 50 on the Fear and Greed Index, which is very similar and resonating with what we did on 21st of January in 2021. And right after that, we shoot back up into the greed and extreme greed. Today, we are back into the greed from the level of 50 that we did a few days ago. But if we zoom in like this, you're going to see that there was some sort of support at the 70 all this period. In here we pinch, but we put a lower high. Then we broke down into the 50. And so far we have the 70, which is the first line in the sand for becoming greed as a resistance. And I think what this is saying is that if we want to play out the bullish case, the greed also needs to enter into extreme greed. If it sees a rejection there, we could see lower prices as well. All right, let's look at the bottoming indicators. Finally, I have this account on CryptoQuant. And as you can see, retail continues to leave the space. Investors with 0 to 10K demand 30-day change has put now a new low in here. It's getting very, very close to what they were doing almost at the bottom in the middle of 2021. Open interest as well pinch the orange support line, as you can see, and has recovered above the orange line. You can see every time that we pinch the orange line with the red oscillator, I'm gonna remove the open interest so you can see it clearly. We are either at a local bottom or very close to one. For example, follow the white dot in the price and I'm gonna try to match the bottom of that line. You get a bounce there, the price continues to put a new low, but you know, it's very useful if you want to fine tune your DCA entries, right? Because you can enter with this one entry, with that one, another entry, you average down and you take advantage of that next move of 20+% up. Perfect. This one is a perfect bottom. This one is a perfect bottom, and this one wasn't perfect, but just a few K about to bottom before getting 100% upside. So it's something that you just cannot ignore. We just pinched that, which is confirming that somewhere around where we were, there was a great entry for a DCA order with good potential for upside. And looking at the BTC price versus USDT market cap 30-day change, which is also another great alpha for bottoming, focusing just on the price action and on these areas in orange where the ratio goes too heavy into USDT versus BTC. They are very close to the best bottoming areas in the full bull market. Sometimes it's a lot more intense, or like here where it's a bit less. And at the moment we are in the orange and we haven't yet come back above the zero line. I will say going back into the zero line for this seems to be a better idea. I don't see any falling knife once you are in the orange, at least in the past 2 to 3 years. But I'm keen to observe how we go back into the zero line from here. When it comes to recent drawdown, you can tell that the drawdowns we had during the megaphone pattern were way larger than the ones that we are currently having. And that's why many people are at the moment focusing on when are they going to enter. And I think analyzing just the drawdown itself, including comparing with previous cycles, is not gonna be sufficient to do a full analysis for your entry. Call it ending with empty hands. And I admit that where we are, there is big risk. So if you are already on empty hands, I'm not telling you just go and enter anywhere. But in the past 2 weeks, all we've been doing is analyzing how to deal with that risk and when to enter, where to place our orders to manage that risk somehow without necessarily ending up empty-handed for the potential upside that we see in these charts. Let's go with liquidation and order book data. The delta at the moment is 350,000 affecting the longs. there is some ask activity as soon as we started with this pump, but the previous time that we had this ask liquidity, it wasn't enough to stop in one hit the price. When we went to 97.6, people started shorting like crazy, but price still managed to get to 102.7 without necessarily being fully stopped. I want to see where are the orders today as we approach the event, and I think the most obvious one is this one at 110K with $76 million. Nothing comes even close to that, and the last time we had one at 100K and the price just pinched above it to get rejected. In terms of support, I don't see a lot. I have to reduce the percentile to 98, 97 to start seeing some resistance at 98K and some very mild buying interest starting from 90K going lower. And the delta hasn't been really useful in this period. As I mentioned yesterday, it's in the middle of a squash. I'm expecting volatility to come in to get us out from this channel in preparation to create a new channel that we can use as delta, as alpha, to trade successfully for possibly another 3 to 6 months. Liquidation levels of the past 30 days, the 97.5 was taken, and now we have it at 98 up until 99 more or less, and the 102.8 ends at 103.2, at least those maximums. Below the price there are levels but are smaller than this. This only captures last 30 days as opposed to what we can see on tradingdifferent.com, which captures a lot more. In terms of fair value gaps, I will say that if we pinch this one up until 95.9, we're in a very good position for this setup to carry on to the upside. But if the price gets tempted to go and take the 92.5, then we are gonna definitely destroy that double bottom formation. And some people might think, yeah, but you can form some sort of inverse head and shoulders. Yeah, a very funky one, we could say something like this if you want. But let's admit, if we do that, we need to be careful that we stop there and we come back and form a neck. And in that case, the neck is gonna have to have some slope in here. So I'm not sure. Let's leave it there and let's see what happens in the next days. And a reminder that the Federal Reserve balance sheet went up, forming a double bottom formation in here. Is just some hopium that I'm holding on to not fully discard the Fed being bullish on the markets. The M2 has bounced from this resistance, potentially turning it into support. That will be lovely to see another spike in liquidity from here coming into the market. This move up, I think, is too mild to say, yeah, sure, liquidity is being injected into the system. Too little, in my opinion, to have an impact that is really visible. Guys, thanks so much for watching. Remember, as soon as you finish watching this video, go to the Coin Bureau Trading, subscribe the channel, hit the like, write down a comment, and be there. I'm hoping to see you all in the afternoon. Guys, if you want to trade Bitcoin, altcoins, want to do it in one of the best exchanges, my top two is Bybit and OKX. You can claim up to 30,000 on Bybit, 60,000 on OKX, and have the lowest fees to trade on those exchanges if you use the links in the description. But they are KYC exchanges, so you're going to have to deal with that. Some locations in the world are not going to be available. So if that's your case, I have two non-KYC exchanges, Blofin and TooBit. Both links are in the description. There is a campaign at the moment I'm running on Blofin, offering even a Rolex, Apple Vision Pro, MacBook Pros and iPhones that you can claim with your trading volume. So if you're planning to deposit and trade, it's a no-brainer as well. There are also great rewards if you decide to go for TooBit. The reason I have two options is because you need to give it a try to both before depositing to see and confirm whether where you live you're gonna need VPN or something else. Give it a try. It's very likely that one of those two are gonna allow you to access future perpetuals and a large array of altcoins as well to trade. Thank you so much for watching. I'll see you on the next one. Bye bye.